What is leverage in Forex? Leverage in Forex is a technique that enables traders to borrow a certain amount of money or capital to invest in a currency or stock. It is represented in the form of a ratio. CGFX provides a range of leverage ratios to cater to each client's knowledge and experience. Some of those ratios are 1 to 50, 1 to 100, 1 to 200, and 1 to 400. But what do these numbers stand for? Let's assume that you have $10,000 capital in your account and that you are trading with a 1 to 100 leverage. This means that your trading capital is $1 million. The trading capital is calculated by multiplying the capital by the leverage. For example, if you decide to buy one lot of euro to US dollar at 1.02370 and close your position at 1.03370, then your profit is $10,000. On the other hand, if you decide to buy the euro to US dollar at 1.02370 and close your position at 1.02070, then you will lose 30% of your capital. Therefore, it is crucial to know that leverage can be a double-edged sword, since both potential profits and losses are magnified according to the degree of leverage used. So use leverage wisely. Stay tuned for more educational videos. CGFX, trade your way to success.